Well, welcome to another episode of the Clarity Corner. I'm your host, Hal Carmine, and I have a special guest with us today, Mr. Steve Mason from Avery Hall. Welcome, Steve.
Oh, thank you, Hal.
And today we're going to be talking about a very important topic of which Steve is an incredible expert in, and that is Medicare planning. On that, it's a question we often get from clients as they approach 65. What do I need to do? Do I need Medigap insurance? It's all types of questions. And one thing we love to do at our firm is find the experts in that specific arena or area and plug our clients in with them. And you have certainly been a great resource for us and for our clients in answering their questions, getting them taken care of, and making sure they're rock solid before they hit that age and even after that age of 65 as it comes to Medicare. First, let's just start out by telling us a little bit about you, Avery Hall, and business in general.
Oh, sure. I'm Steve Mason, and I've been in the insurance business for a little over 30 years, various capacities, liability insurance, annual homeowner claims, commercial claims, did underwriting for a while with Donegal. And so I've been doing the Medicare coverage for about 4.5 years with Avery Hall. I'm a licensed agent in Maryland, Delaware, Pennsylvania, North Carolina, South Carolina. So we have various areas that we can provide customer service for. Avery Hall has just celebrated 100 years this past year in June of 2025. We have 5 offices throughout the region, Maryland, Delaware, and we provide not only Medicare coverage, individual health coverage, but we also home, auto, commercial policies as well. But I've been, enjoying the Medicare coverage and individual health. We work individually with our clients to provide them guidance and make sure, that they have a good comfort of feeling. A lot of times, especially with Medicare, they're retiring. They're transitioning from an employer group coverage into Medicare. And so they have a lot of questions and a little concerned about what the next step would be. And so we can help guide them.
Excellent. I will say this. We've enjoyed working with you immensely because you share many of the same values we do when it comes to client service. Anytime we've reached out and said, hey, we have a client, we're going to refer over to you, the feedback or the contacting of us and that client is almost instantaneous or certainly within 24 hours. So we appreciate that greatly on that. And every client that we've referred over, incredible feedback. So I want to make sure you know that we appreciate what you do for our clients out there and certainly the level of client service and client touch.
Yeah, thank you.
Is huge for us. So who do you typically work with then when it comes to Medicare?
Medicare, age-wise, we're usually looking at folks that may be turning 65, usually about 6 months out, or clients that are working beyond age 65, still employed. They may want to work until age 67 or 70. We can help work with those clients to provide them with the direction, what the next steps are for enrollment into Medicare for that. We also have clients that are under age 65. They retire, but they still need health coverage. So individual health coverage we can provide, Maryland, Delaware, give them some guidance in regards to what would be the best plans, best coverage for them during that time period.
That certainly is a huge question we get when a client is looking to retire early is how are we going to afford health coverage up until that point?
Right.
And most of the time it is affordable, looking at the correct options and looking at some of the exchanges programs that they have on there.
Correct. And in Maryland, they have the Maryland Health Connection. That is the exchange that we can go on and we can check. It's based on age of the client or maybe be their spouse or children that they have, their zip code, and their base income for that upcoming year. That all factors into if they may be eligible to qualify for a tax credit that would reduce that monthly premium, which can be pretty hefty in Maryland and also in Delaware. Delaware uses the healthcare.org marketplace for that coverage as well.
And correct me if I'm wrong, but whether they go through the exchange or whatever the state is offering directly or through you, there's no difference in cost of that healthcare premium on that
Correct.
exchange.
Correct. It's the exact same cost. But what we do is we help guide the clients. It can be a little challenging. Folks call in to the Maryland Health or healthcare.gov, and it can be a little challenging to get a direction and feel. We meet with clients face to face and provide them with a review of the coverage, answer any questions they may have, and we can enroll them. And then, more importantly, we can provide service to them as they're in the policy period. We can assist with any adjustments of income or any issues with the policy. That's what we can provide versus them doing it on their own.
And the goal there, I'm assuming, is to balance affordability and cost,
Correct.
along with trying to match up to the plan they had previously, especially if it was a good plan in terms of benefits, deductibles, and things like that.
Absolutely. Usually, Maryland, Delaware, I'll just use those carriers. There's usually a higher, like a top plan that has lower copays, lower deductibles. And then you could move down to maybe like a bronze type plan, which would have a higher deductible. But it depends on the client's, health status, what their needs might be in the near future for that. And we can assist them with that aspect.
Gotcha. So let's dive in then. First, what is Medicare?
Medicare is it's a federal funded individual health coverage that has copays and deductibles for a client. It's an individual policy for each person that's going on to Medicare. Typically starts at age 65 and older. It all depends on your situation. If you're turning 65 and you're retired and you're going on to Medicare at that point, typically we advise to start looking into it about 6 months out, but then you can start to enroll into Medicare 3 months prior to your 65th birthday. But we can definitely give you an idea, guidance of what the cost would be and review the coverage and advise you on that.
Okay. So does it cover all healthcare expenses?
Not all. So Medicare does have deductibles and also has copays. And there's a couple parts to the Medicare coverage, but there is cost to the client or the individual that's enrolling into Medicare. So that's something you got to be aware of, and we can provide review of that and answer any questions on that coverage aspect.
Okay. What surprises people the most when they enroll in Medicare or start to look at that?
Well, the cost. Medicare, there's two parts basically with Medicare. Medicare Part A, there is no cost if you've worked more than 10 years and you've paid into Medicare. There is no cost. Part A is hospitalization. Part B, there is a premium, and currently in 2026, it's $202.90 per month base premium. So some people are a little surprised at that they have to pay, a $202.90 per month premium. And so that is a little concern. And that only covers 80% of your medical coverage expenses.
Okay.
So then you would have to look at a potential, either a supplement or an advantage plan to pick up the additional 20%. And that's an additional cost as well.
Okay. So I hear a lot about that. Should I get a Medicare supplement?
Okay. Sure.
And that covers the other 20%?
That is correct. So, that's something when we look at Medicare, you're kind of looking at it as like an auto or home coverage. You have to have, you have the coverage in place. You're not certain that you're going to have a surgery or medical situation. You may need health coverage in the next year or two. However, you want to be protected in case that does happen. So the Medicare Part B covers 80%. The supplement plan would pick up the 20% that's not covered. So it's not required, but it is something that's going to protect you and provide coverage for you in case that's needed in the future.
Okay. So we have Part A, Part B. There are other parts to it if you want to go ahead.
Yeah, correct. So the other part would be Part C, which now that is an advantage plan. So that is something that goes in along with Medicare Part A, Part B, and a Part C advantage plan. That all depends on where you're located. On the Eastern Shore of Maryland, Delaware, typically an advantage plan Part C is not the best option because you'd have to ask and check with your providers to see if they accept it. But it's kind of picking up that difference of the 20% and also offering prescription. a Medicare supplement plan would be the option to a Part C, but there is no network with a supplement plan, so you can go anywhere in the U.S. and it's accepted by all providers for that.
So Medicare Advantage, the provider has to be willing to take that.
Correct, and it's a network-based coverage. So typically, you'll see where it says check your zip code to see whether it's covered or not. So if you are going for medical service outside of your zip code area, out of state, there may not be coverage under that Part C Advantage plan. So that's why you really got to check to make sure, is that something that is in the best interest of yourself to go on one of those versus a Medicare supplement plan.
Okay, and then what are the price differences? Is there a price difference?
Yes, there is. A Medicare Advantage plan, again, it all depends on what the carrier is. Typically, it's a lower premium. However, it has a deductible or copay for every service you go to. And again, it has to be in network. And also typically they have a max out of pocket for the year. Typically an average is $7,500 for max out of pocket. This is a Part C Advantage plan. A Medicare supplement plan, the premium tends to be higher, but it's set. And so you know exactly every month what that cost is going to be. And typically there's a $283 Part B deductible that you would have to meet. And then that would be it on a Plan G supplement. And you would know exactly what those cost. So it's much less costly in copays, deductibles with a supplement plan. And it's accepted anywhere in the U.S. So there's no network for that.
So what would be the reason that someone would take the Advantage plan? Just from pure cash flow premium?
That and depending on where you reside. Typically, Maryland, Delaware is not the better area because it's a network system. If you're, just to use the example, if you're in Florida, it's well accepted. Okay. So that's something, it depends on which state you may be residing in.
Gotcha. Okay. Yeah. Excellent.
Yeah. And then there's also a Part D.
Okay.
That is the prescription plan. Part D is where if you're going to your pharmacy, Walgreens, CVS, Giant, your local pharmacy, you will need a Part D prescription plan to obtain your medications for that. If you're on Medicare Part A, B, a supplement, then you would add a Part D prescription plan for that. And that can be a little challenging. You'd asked about other surprises. Part D prescription plan, depending on the medications, can be a little challenged, especially with a brand type medication.
Okay. So let's say household, husband and wife retire, 65, Part A, Part B, they go into supplement and Part D. Can they pretty much set that and forget it and let it ride for the remainder of their retirement years, or does that need to be reviewed?
No, they could. Technically, they could. Once you're set, that policies will renew automatically every year as long as you're paying the premium. They will renew every year. However, unfortunately, premiums increase. Plans change, so you really got to review it at least every 2 years, just like an auto home policy. You really need to be active in regards to reviewing it and making sure you're on the better coverage-wise, and also the price is in line with what your needs are and what's also the going rate for that particular year.
So you could theoretically, if their premium went up on the Part D, you could switch that every year.
Absolutely.
To find the best coverage?
Yes. So in regards to the Part D prescription plan, every October 15th through December 7th is the annual enrollment period for prescription plans. So if you're enrolled in a Part D plan, every year you can check, beginning in October, is the plan that you're currently on going to be the better plan for you in the upcoming year? If it is, you just remain where you are. But a lot of times the carriers do change their formularies, their pricing. Sometimes they accept medications this year. Next year they're not. So you really got to take a look at the prescription plan every year, in my opinion. You want to look at that at the beginning of October to see, is that the best route? Because they can change. The premiums do increase. And if you do not make a change by December 7th, you're going to have to remain on that plan for the upcoming year. And that's It could be a cost factor. You'll still obtain your medications, but the cost would be more. It would be increased cost to you.
And that's one of the things that you do with all of our clients, I know, is review that coverage
Mhm.
starting on that date or close to that date to see if that's still going to be a good fit.
Correct. We can definitely help guide clients. We're going on Medicare.gov. Everybody has access to it. It's free. You can go on and check using your zip code, using the name of your pharmacy that you prefer, and using the medications you're currently on is something we can kind of check and see. Is that the best option for you in the near future? Now, it does not take in consideration that now you may be administered a new medication during the year.
Right.
But it's just basically based on your current medications going forward, this would be the better option for you.
Okay. So is that the only date that people need to be cognizant of in terms of enrolling for the Part D? Or are there any other dates that are imperative when enrolling in any coverage with Medicare?
For the most part, once you're enrolled into Medicare, you're starting out, you do have a 60-day time period to enroll into a Medicare Part D plan. Once you're enrolled and you're active with that, then yes, then October 15th through December 7th would be your time period. I always tell everybody, circle October 1st. Take a look at it, and that is something we can, definitely review and assist you with that.
Yeah.
And a lot of times, this year we received a lot of calls, and a lot of times, I'd say probably 80% of the time, you're all good, just remain where you are. And then the policy will just continue and roll over for that. So they can never cancel you as long as you're paying the premium.
Right.
They can never cancel you for the number of times you go for medical treatment in regards to that aspect of it. The supplement plan or the prescription plan, you're on that plan as long as you wish.
Well, that's good. I mean, even if it is to stay on the plan, that's very reassuring to know, hey, you're in the best plan. We're good for this year. We'll revisit next year.
Correct.
Or
correct.
if something comes up with a new medication, something
Correct.
like that, look to change
Correct.
next year.
Now, one other thing in regards to review, the supplement plans. And also, if you elect to go on an Advantage plan, you always want to take a look at that every year. You can look at it. You can change the plans. Typically, right now, there's basically 3 plans for supplements. A Plan G, which is a better one. It has a $283 annual Part B deductible, and then it pays for all their costs for the remainder of the year. It's the better one because it's the least amount that you'll pay out, and it's providing great coverage. The Plan N, it's kind of like your next step down. You have a $283 Part B deductible, but then every time you go to the doctor's office, you have up to a $20 copay, a $50 copay at ER visits, and you'd be responsible for any excess charges that might be charged by a physician or medical provider that does not accept Medicare. Rare, but just that is a possibility. There is a 15% cap on excess charges. So that means a provider that does not accept Medicare can only charge up to 15% above the Medicare rate. So there's a little bit of cap there to kind of keep that. But that's Plan N works well. Then there's a third, the Plan G high deductible. So the premium's much lower for that plan, but there is a $2,950 annual Plan G high deductible that would apply.
Okay.
So it really depends what your health looks like and how often you think you're going to go. Correct. And that's something we can review and answer and show you. I typically like to show my clients all 3 options and then let them think about what might work best for them. You can change the supplement plans anytime. There's no time period that you can change. A lot of people think, well, I got to change October during the open enrollment. No, you can change your supplement plan anytime. However, if you wanted to change after being on a plan for over 6 months from initial enrollment, you would have to go through medical underwriting. All carriers have medical underwriting questions. Typically, it's about 20 questions. They're looking for chronic type issues. They're looking for your height, weight, any tobacco use. And they're looking for to review that aspect of it. And age is not a factor. It's just, what is your health condition and so forth at that point. And then the carriers will review. And if they find you're acceptable, they will approve it. And then you can change your plan. A lot of times, why are you changing your plan? the costs. As you age, your supplement plans do go up.
That was my next
That,
question.
that's the thing.
Right.
As you go, you start out, say, 65, they start going up every year thereafter. And male, female is rated a little different. Males are a little bit higher, but it's the same coverage, but the rating's a little different.
Is there any point on that age journey from, let's say, age 65 to 100 where it just becomes so expensive it's not worth it to have it?
Uh, it can be very expensive. I find some of our clients that are in their 80s and even 90s. I mean, it can be pretty hefty. However, the need for it is probably more at that point because you don't know.
Right.
It would be something you would definitely need to have in place because a hospital stay, just one, 2 or 3 day hospital stay could be very expensive, and you want to make sure you're covered for that.
Yeah, we always say, especially as it relates to long-term care premiums, it may
Right.
seem expensive, but if you use it, it'll be the cheapest premium you've ever paid.
Correct. Absolutely. Absolutely. I mean, I have some clients that, they're very healthy, but, they may have to go into the hospital for, appendicitis or something comes up that's not, obviously not planned. And that could be a factor where that supplement coverage will definitely take care of those expenses for them.
Okay. Another question, and we actually just worked on a case together here with one of our clients. Take someone who's still working at 65 and they say, hey, HR told me that I've got to enroll in Medicare. So instantly I refer them to you to answer that question to make sure we get a concrete answer. How does that work if someone's working at 65? What are the factors you need to look for? Do they need Medicare supplement at that point? Kind of brief us on that.
Oh, sure. And that's very good. Actually, I probably get 4 or 5 calls a week with that same scenario. So with Medicare, and a lot of people, if you have group employer coverage, it's got to be credible, which means it's like a Care First, United Healthcare.
Right.
Credible group coverage. And there's more than 20 employees in that for that employer. The client can remain on the employer group coverage at that point as long as they wish. So there is, the employer can't say you have to go on Medicare. Okay. But if they're under 20 employees, then they have an option to say, well, you need to go on Medicare at that point. So that's something you want to have a good conversation with your HR. But a lot of people hear penalty and everybody's concerned, I don't want to get penalized. So I have a lot of clients that are work beyond age 65. I had one client, 78. So as long as you had group coverage, up until that point, you're fine. You can stay on that as long as you wish. Really, it's a factor of coverage and cost. You really want to compare what would it cost for Medicare coverage and what would it cost me for the group coverage. And so you want to compare and make that decision so you can have a good understanding of which direction you want to go. But really, a lot of people just remain on group employer coverage because a lot of times a spouse is on there or maybe a dependent might be on that. So they want to just continue on that as long as they wish. But when they're ready to retire, I tell everybody, usually about three months out, you want to plan to now transition from the employer group coverage onto Medicare. So that requires a couple forms that you have to have the HR complete. And then you would take that to Social Security for them to file and to show proof that you had group coverage after age 65 up to whatever your age is when you retire. So it's a very, very easy thing to do, but a lot of people are very confused with that. But we just want to make sure that that you are entitled to remain on group coverage if it's more than 20 employees, but under 20 employees, it could be up to the HR and that employer whether or not they wish you to continue on that or go on Medicare.
Okay. Along with that, with someone still working at 65, let's say they're under 20 employees, they end up going on Medicare. If they're still working, they're going to still have a lot of reportable income, earned
Correct.
income, and that certainly plays a factor in the planning we do. even for clients not working, where do we pull the retirement income from? Because what's affected is IRMA and how much that premium is going to be. Can you dive into that a little bit? What is IRMA that they hear about?
Okay.
It's not a person. It's an
No.
acronym. So
Right. So Medicare enrollment, you're going through Social Security. A lot of times in our area, I tell everybody to work with your local Social Security office, Salisbury, Georgetown, Delaware, area. That way, typically you can walk into their office, and if you have any questions, or they're very helpful to understand that. Now, a lot of people are not aware of this until they start the enrollment process, and then they find out regards to IRMA. What is IRMA? Income related adjusted income. They're looking at 2 years back. So right now in 2026, Social Security is going to review, and they go back to your 2024 tax filing. And if you're filing individually, it's about $112,000 threshold. If you're filing jointly, it's a $218,000 threshold, meaning if you're below that amount, you're going to be paying the base Part B premium of $202.90. If you're above that amount, they have different levels of income up to, I believe it goes up to 750,000. You could be paying much more premium per month if you fall into one of those categories. So that's something you really want to take a look at and see what is that scale, what's that income, and you want to kind of plan ahead for that. But you want to make sure, because it could double or triple your Part B premium based on your income. Now, also, if your spouse is going on Medicare at the same time, it's the same premium for a spouse as it would be for the individual client that's doing that.
Household.
Yes, that's correct. And there's also a Part D IRMA as well. So they add maybe $8, or they could add up to $80 additional premium per month for that Part D prescription coverage. So really you want to kind of look at that. Now, I do know a good friend of mine worked in a bank. When she retired, she filed, there's a form, Social Security has a form for everything, but there's a form, a special life-changing event. She retired. So her income for that year is not expected to be where it was. So you have to file, you have to provide documentation, but that would allow you to possibly move down into a lower bracket so you're not charged as much on the IRMA.
That's one of the questions I was going to ask. Let's say a client's retired, they're at the base in terms of that, and they have a large sale of an appreciated property or appreciated asset of some kind. So their income for that one specific year is going to be off the charts or very high compared to what they usually are. Can they apply for that exemption?
Okay. I'm not an expert on that aspect, so that's why I'd always defer that to either an accountant or Social Security office directly. However, I do know from speaking with different clients and also Social Security office employees, it can fluctuate. So you may not be on IRMA this year when you first go on, but like you indicated, as your income increases, you could be elevated into a IRMA bracket the following year. So that is, I would always recommend that you at least take the steps to say, look, this is a one-time sale, this is a one-time income, and that might be. But again, it's all up to the Social Security office to review and make a decision whether or not that you would qualify for that.
But approve or not approve.
Right. And I would recommend, definitely take the time to file it and see what they say. But it can,
no.
Right, exactly. So it can go up and down. My understanding. I mean, so that's something you want to definitely take a look at and see, because it can be a pretty hefty premium when you look at some of those levels.
It can be, especially if one spouse is still working, let's say, and we do need to draw some supplemental income because the other spouse is retired. Where would we pull that from?
Right.
If we're pulling from qualified dollars, then all that money could be taxable. If we're looking to rebalance the portfolio and kicking off some capital gains or realizing some capital gains, all that could come into play.
Absolutely. Yeah. So it's always good to look. You always want to be reviewing it every year. Those IRMA limits do change every year. So last year it was 212. It went to 218. So it's about $6,000. They do increase the levels each year. And then the Part B premium does change as well. It goes up a little bit as well. So that's something you always want to kind of plan ahead and be on that. But I'd be proactive in trying to reduce if at all possible.
Absolutely. There's also some special birthday rules.
Correct.
Dive into those. There's so many facets of this. You can see why we bring in an expert that does nothing but Medicare planning on this.
Oh, sure. So the birthday rule. What is the birthday rule? In 2023, Maryland, in the area, Maryland was like one of 8 states that had the birthday rule. The legislators in Maryland voted in 2023 to implement the birthday rule. It is a law in Maryland that if you are a current Medicare and have a Medicare supplement plan, you can 30 days after your birthday, submit an application to change your Medicare supplement plan to an equal or lesser benefit plan with no medical underwriting, no medical questions whatsoever. So it's a guaranteed issue, but it has to be submitted within 30 days after your birthday.
30 days.
Okay. So your birthday is February 25th. You got to get it in there by March, say the 23rd. Don't want to wait until the very.
I would give myself some buffer.
But typically, what I usually say, if your birthday is February 25th, we usually try to start at the upcoming first of the month. So that way you have your current plan will remain until the end of the month and your new plan will start the first of the month. That way you have confirmation, you have new ID cards for your new plan, and the transitions goes smoothly. But in Maryland, that was in 2023, and it continues. So why? Because some clients may be paying much higher premium than what they can get a current plan, same coverage, same plan, same coverage for a lesser premium. Okay, and that may be meaning you change from one carrier to another, or you may change from the same carrier to a different plan. Yeah. So I had some clients that would go from a G to an N. You can do that. The only thing is with the birthday rule, you cannot go from a plan N back up to a G or an F. You cannot increase in benefit using the birthday rule. Now, that has been very helpful to a lot of clients because, they're saving, $50, $100, $150, $200 or more per month in premium. Because over the years, if they had not made any changes, that premium has really crept up because the carriers every year will send out a renewal notice and that premium will go up. A lot of times it goes up faster than what the current market rate is. And so that's why we've been very helpful to provide guidance, give them a quote, let them know about it, and then we help transition them from one carrier to another. It's very simple with that. That is Maryland. It's catching. Delaware just started January 1st. Now, Delaware is actually a little different, but it's 60-day time period. So that means you can submit an application 30 days prior to your birthday and up to 30 days after your birthday to make a change. Virginia also started in 2025, and that is 60 days after your birthday. So Virginia's a little different, but it's all about the costs.
Right.
Really not. A lot of people stay on the same plan. They just want to change and lower the cost, and that's what you can do that every year. Technically, you can use the birthday rule every year. The carriers are supposed to be sending a letter out, so usually about 60 days out of your birthday, advising you that this is an option for you. And so that's something to take a look at. We should be able to advise you, here's what the cost is, and then a client can make a decision whether or not that's feasible or not. I mean, if it's less than $15 per month or $10 a month, it may, a lot of times we just stay where you are.
Right.
We can take a look at it next year. But that's what the birthday rule is. And it's been very helpful. So it's not a carrier decision; it's a law, and so they have to abide by it. And it's been working pretty well with Maryland and obviously Delaware now that's starting in. The only downside with that is what we're seeing. I just want to make sure you know, Maryland, the claims history is going up. So with the birthday rule, a lot of claims are starting to increase, and that's in the premiums. The carriers are adjusting the premiums accordingly. Yes, absolutely. Because I mean, the carrier is going to look at the numbers, and they're going to evaluate, and then they're going to set their premium based on their claims history.
Right. Well, I mean, not to get into a huge how does insurance work out there, but
Right.
it's a pool of dollars that,
Absolutely.
going out, the healthier everyone is, the lower the premiums.
Correct. Absolutely. But that's something. It's very helpful. It's a very good tool, and we've helped many clients with that change. But the main thing is you want to give it enough time, because a lot of clients have an automatic bank withdrawal.
Mm-hmm.
So if I'm looking at, say, March 1st, I want to make sure disenroll from the automatic, not cancel your policy, disenroll from that, so that way it's not being pulled.
Right.
We get you set up on your new policy, then you would cancel your current policy to coincide with the with that transition.
This might be hard to quantify, but how much have you seen premiums increase kind of across the ages? And I asked that question just because from a long-term care insurance perspective, their renewals have been astronomical.
Right.
With most clients either adjusting or dropping coverage. That's not a recommendation. It just becomes a cash flow issue of how much premium makes it worth it.
Right.
We've seen dramatic jumps in the cost of long-term care insurance or renewal premiums. Is it the same in this arena or less? More?
Right. It all depends on the state. And let's just talk about Maryland. Maryland this past year, a lot of clients have seen 15, 20, 25% increase in premium. So Maryland has been a pretty heavy jump for a lot of the clients. So a lot of the clients are looking at, is a Plan G an option, or should I move to a Plan N to lower my premium, still have good coverage?
Right.
So do I want to make that test? So we are seeing a major increase in Maryland. Delaware has been pretty stable. Virginia's been pretty good. But I think one of the drivers is the birthday rule. Mm-hmm. And so now that Delaware and Virginia have implemented that, maybe a year or 2 years down the road, when they start looking at their claims history, that might change as well. But yeah, that's something people are very concerned, especially the age. As you get a little older, the premium goes up based on your age, male, female, and I assume the actuaries that are assessing and looking at the rates, they're taking consideration what is the average cost for that particular person. So and also state, it depends on which state you might be residing in.
Okay. If someone said, okay, well, if premiums might go up, I'm not even going to worry about it. Where's the line of self-insuring versus someone who just frankly doesn't need it? There's kind of two extremes. Who wouldn't need Medicare supplement? Or what are the dangers of not having it?
Okay, sure. No, I understand. So when you first go on Medicare, you have a 6-month time period to enroll into a Medicare supplement plan with no medical underwriting. So you do have some time period if you want to say, you know what, I'm going to take a look at it and see I'm pretty healthy. But after that 6-month window, now all carriers would require that you complete a medical underwriting review, and then they would have the ability to say yes or no to approve you. So I've seen I have some clients that, they, like you said, I'm fine, I'm fine. And then they wait, 5 or 10 years, and now they want to go on a Medicare supplement plan. They would have to go through underwriting. And if they're healthy, that's great. They get approved, they're fine. But there is, under Part A inpatient hospital, if you're admitted 1 to 60 nights, there's a $1,700 deductible. If you do not have a supplement plan, you would have to pay that deductible. Maybe that's a cost. But if you're admitted 61 to 90 days, now it goes up to $13,000. So that gets a lot more cost-wise. You really got to look at that. And then if you're in there 91 to 150 days, it goes to $52,000. So rare, obviously, but possible. So you really got to look at the, what's the chances of actually having to use that. And there are a lot of factors they would have to, in regards to that, taking that coverage. Part B has a 20%, the client would have to cover the 20%. Now, if you're just going once or twice a year for doctor visits, it's not a bad deal.
Right.
You're in very good health and it's not a costly thing. But if you have even appendicitis or you have maybe an outpatient knee surgery or hip surgery, that could be pretty costly. So that is something you really got to look at and assess whether or not that's something you want to you know have coverage for. And then in that particular case, if you're really not looking for it, you might want to look at a Plan G high deductible, very low premium, but at least you have a more catastrophic type coverage that you would be able to take care of any high expensive costs, medical costs.
Yeah, like I said, if you need it, it's going to be the cheapest premium you've ever paid.
Absolutely. Correct. Yeah.
Insurance also, with that cost, is that peace of mind to know, hey, I hope I never have to use this for something catastrophic.
Mm-hmm.
But I know my family would be protected if I do, and our assets aren't going to simply disappear with medical bills.
Correct.
That's what you're insuring there.
Correct. Absolutely.
On that.
Absolutely. Now, also, I'd say we have a lot of veterans, and that's kind of like, well, do I get Medicare supplement? So veterans do go on Medicare A and B. Now, we're very fortunate. We have a VA facility in Cambridge. It's more of like a primary care type facility, and also Pocomoke. And I believe also in Georgetown, there's one there as well. So you can go on and get your prescriptions through the VA. I know a lot of clients that do. So that way you don't have to get a prescription plan. You can just go to the VA and get it mail order for you. So that's one way. You can use the VA instead of a supplement. But again, a lot of times it's living on the shore, Maryland, Delaware, it's a travel. If you have to go to a specialist visit, you're typically going across the bridge for any type of specialty type. So a lot of clients, they do, typically they get a supplement type coverage just to make sure, and that way they can see their local doctors and providers here, and they know that they're being covered.
Just went through that with my wife's father. So, I mean, they had to travel north to essentially Ellesmere for the VA specialists and things like that.
But that's just something you can think about. But just want to make sure, there are some different aspects with the VA benefits versus, somebody that does not.
So let's say we have a client come in, or not a client of ours, whoever, and they say, hey, I'm getting ready to hit 65. I'm retiring. How does your process work when a client calls you?
Oh, sure.
Kind of take us through.
Yeah. Okay. I just want to, when I talk to a client, I just want to kind of get a sense of what, like you said, are they working full time? Are they planning to retire at age 65? Kind of get the basics on that. And then typically what I like to do is I like to set up an in-person meeting because, face-to-face, we have a guide that we walk through, we answer any questions they have, but we can show our clients what Medicare will do, the coverage, it'll show the cost, and it's a lot easier to see it in person versus that. But typically, you really want to start the process 6 months out at least just to meet, but then you can start enrolling 3 months prior to your 65th birthday.
Okay.
And then, if you're not sure, you're still working, but hey, I might work another year or two, hit 67, we can meet at 60, 6 months before 65, we can at least give you some guidance and cost factors. So that way you can compare maybe an employer coverage versus what Medicare coverage would be for you. But that's, we would meet, go over, typically I ask for your prescriptions to run your prescription plan. That way it gives you a good sense of what's it going to cost me and how's the coverage going to work at whatever time I decide to move on to Medicare.
So some of the things that person or that household can have prepared: income, essentially, where's my income?
Yes. Total income. Correct.
And then what prescriptions?
Correct. Yeah. Just to list your prescriptions, your daily dosage, and preferred pharmacy. And then we can just run and I show you a plan of what might work best for you at that point. Yeah. And that's, like I said, we just want to, I always like to go over it. You don't have to do anything, as far as making decisions or enrolling at that point. We go over the coverage, we answer your questions, and then you can think about it, and then we can do a follow-up. But then at that point, if you wanted to move forward, we would assist you with the applications to enroll into a Medicare supplement plan, and also provide guidance with a prescription plan as well.
Okay. So simplifying that process is huge.
Yes. Yeah, absolutely. Absolutely.
Especially online, there you can get all this information, but it's so much to digest if you don't deal with it every single day.
Correct. And a lot of clients are they read the book and they're very confused. And I completely understand that. So it's better to, go over it and, like you said, simplify it and just answer any questions. Now, you do have some clients, maybe a spouse is turning 65, but another may be 62, 63. So in that particular case, the one with 65 would go on Medicare. The other may need individual health coverage for a year or two, and we can provide that as well until they turn 65 as well. So, and we see a combination there with that.
Excellent. Now, like I said, when it comes to this arena with estate planning, no matter what it is, taxes, we're making sure we bring in the CPA, we're making sure we bring in the estate planning attorney. Same thing here. Right. This is something that you don't want to make a decision, and then if we can't get out of it, or especially with the underwriting after 6 months, if there's an underlying medical condition and you wait, that could be costly.
It could be. Correct. And the carriers have very skillful, they have a very technical database that they can search, and they look at your medical history. They go back 7 years on the underwriting. So that's something you really want to take a look at and make sure you're in good regards to the time frame that you're meeting that and enrolled in that, because it could be a factor in their use. Now, an Advantage plan, we talked a little bit about Advantage plans, but Advantage plans, there is no underwriting, but there are copays, deductibles, and network you have to look at. And then also, if you're on an Advantage plan, then you want to go on a supplement plan 2 or 3 years down the road, then you would have to go through underwriting. Okay. Correct. The only reason you would not have to do in that particular case is, one, if the carrier, your Advantage plan carrier, no longer writes in your area, they stop the plan, and that does happen, or you move from one state to another. So you're moving out of state, like I have clients that move from Florida back up to Maryland or Delaware to be with family. So that is a guarantee they can go from an Advantage plan to a supplement plan with no questions asked. Gotcha. That is something, that's one of the few times that you would have to do that.
But if you're staying in the area, you think, okay, I'm not really going to the doctor much, I'm going to go with the cheaper premium here. Then something happens 2 years down the road and you want to switch, you may not be able to.
Right. And I receive a lot of calls on that. Hey, we're on an Advantage plan. I'm getting hit with that $7,500 max out of pocket for the year. Unfortunately, at that point, there's a reason. And unfortunately, if they have a medical condition or treatment, they would not be able to switch from an Advantage to a Medicare supplement plan, typically at that point. Again, everybody is a little different, but we could review and assess and provide guidance for each individual client.
Okay. So in closing here, what's another piece of advice we haven't covered for people out there when it comes to this Medicare planning?
Yeah, sure. It's just looking ahead. I guess making sure you are looking at the time frames because there are time periods for enrollment, and you don't want to miss any of those. But you want to talk to your HR manager, get some feedback from them in regards to what's your requirements to, if I'm going to continue to work beyond age 65 with the company, is that something I can remain on the company's employer group coverage? That's a big factor. And just, you want to look at the cost. I'm going to say, sometimes you're on individual health coverage with a tax credit paying $100 a month premium with a tax credit. But when you hit Medicare, it's extremely rare to get the financial assistance with Medicare. The cost now, on average in Maryland, it's about $350 to $400 per month cost with Medicare A and B and a supplement.
Okay.
So that's one thing you want to make sure you're kind of planned ahead with that. Now there are financial assistance, but again, it's something case by case. You would have to take a look and see what's available for you on that. But just, I would say at least 6 months to maybe even a year, just kind of plan ahead to find out what is the estimated cost, and that way you can make a very good decision on your direction at that point.
And we'd recommend that too, to start to get in contact with you prior, with enough time to get to know you, get to know the process, and hey, which direction are we going to go? What are our options, which we run into many times together here. When we
definitely. Okay, sure.
So,
yeah. Then one other thing, I just want to make sure, we provide this. There is no consulting fee. We don't charge people to meet with. We get a commission from the carrier. That's how we're compensated. But, I meet with a lot of clients. Again, there is no cost to meet, talk with them, and I can meet 2 or 3 times. We can do one other thing. I just want to make sure we are not just limited to Maryland and Delaware. We are any state. I'm licensed in North Carolina, and he's actually talked to one of my clients. Yesterday she moved from Berlin, and she's in Nebraska, North Platte, Nebraska. So I'm getting licensed. So I can easily. It's an easy to work, but we can work with anybody in the U.S. It's the same coverage no matter which state you're in. We can assist you, and we can do Zoom. We can do whatever works best for you. If it's in person, is not a viable meeting type thing.
Awesome, excellent. Well, Steve, I appreciate you coming on today.
Oh, sure.
And enlightening everyone on the many facets of this Medicare planning. Like I said, you've been a huge resource to us, to our clients, in providing expertise and really peace of mind for us and for them in this planning. We think it's a huge part of retirement planning. Simply put, it's cash flow. And if you don't do the planning, something big comes up. It can really change your financial picture quickly if you're not prepared for it.
Yeah, absolutely. And Hal, thank you. I appreciate it. I was looking back. Before I started with Medicare about 6 years ago, I was at my mom and dad's, and they're in their 80s. And I just remember the Medicare, they had a conversation and the cost. And I just remember how stressed out they were. So it can be a very stressful time, but that's what we're here to help, guide and provide options and give, clients a reassurance and direction on what we can, or how they can handle that. And I do appreciate your time and enjoy it.
Excellent. So we'll put your contact information on how to get a hold of you.
Great.
Both
Sounds
phone
great.
number, email, web link, website link in the show notes on the podcast, as well as any posts that we do on social media. And certainly any of our clients or anyone out there can contact us. We'll get you in touch with Steve right away. And we appreciate you. Thank you very much for coming on today.
Thank you, Hal. I appreciate it. Have a great day.